and your entry is costing you pips and profits in the market. In this video, I'll show you the top 3 forex trading entry techniques you need for consistent profit in the market. So if you're a new viewer, click the subscribe button, give us a thumbs up, and let's jump right into the video. So the first example, we'll be using the Bitcoin USD chart, and the first entry technique we'll talk about is the instant execution. This is what most traders use. The instant execution, or the market order, if you have been trading for a while, is an order that is placed instantly once you click either the buy or the sell icon on your charts or on your trading platform. So the order gets executed immediately once you take that trade. For example, if we are going to take this buy, this for example purpose, once we click on the buy icon, we have been triggered into the buy, so we're already in the buy. So once you use the instant execution or the market order, the order gets placed exactly where you took that trade. So that's the instant execution, and this is very good when there is high volatility in the market, or when there's a news release, CPI or other top major news release. So as you can see, we are currently in profit. We are still live in the market. We took this trade around this level, and as you can see, that is where our trade was placed. So that's the advantage of using an instant execution. But when there is high volatility, or when there is a news release, that's another example, or that's the best time to use an instant execution, because you are going to benefit from the spread. But some of the disadvantages is there's going to be high slippages in the market during news release, so you should keep an eye on that. But these are some of the advantages of using an instant execution. Your trade are executed at exactly where you want them to be. So that's the first example. So the second example will be on pound JPY, and the second entry technique is the pending order. The buy stop or the sell stop entry, the pending order. And what is the pending order? This is an order you place when price breaks a certain level and start pushing in your direction. So what are we saying? Let me show you guys. Okay, price is currently back at a resistance level in the market. So if we are going to enter this market, because we don't know if price is going to continue bullish and break above this level, we are going to use a sell order, sell stop order, because price has been respecting this level and this candle is still bullish. So we don't know if price is going to break above. So the best way to trade this is to use a sell stop order. So this is how our trade is going to look like. We are going to set the sell stop order somewhere slightly below the open candle, somewhere around this level here. So the logic behind that is, let me set the stop loss. So the logic behind the sell stop order is, if price keep respecting the level and turn bearish again, that's the only time we get triggered into the trade. But if price break above, so this is the point we get triggered into the sell. So this is a sell stop order. It's a pending order. But if the price continue up, we are not going to be triggered into this trade. But if price keep respecting the level and turn bearish, we are going to be triggered into the trade, and we are going to enter with momentum, because momentum is now on our side, and we are going to get triggered into the trade. But if the market keeps flying up, we are not going to be triggered into the trade, and we can delete the order and look for another opportunity. So that's the beauty of using the pending order or sell or buy orders, because it helps you to set your trade, plan your trade, and wait for it to play out. You don't get impulsive in the market. You don't take an instant execution at key levels like this, because there's a higher chance price might break above that level and continue bullish, or price might reverse at this level and turn bearish. But we are not sure about that. So the best entry technique to use at key levels like this, if you're anticipating a reversal, is to use the pending order, either a sell stop order or a buy stop order. So that's how you use the pending orders. So the last entry technique is the limit order, the buy limit or the sell limit order. And the limit order, these are orders that are placed above or below current price, expecting price to get back to that level and trigger us into the trade. So currently on gold, the trend was trading up and we had a break of that level by this strong bearish candle. After the close of this candle, what do we see? Price pulled back to retest that level. Let's say we're live in the market, and after the close of this bearish candle, this is how we are going to set our sell limit. We're going to set our sell limit slightly below the level that was broken, which is this level, because we expect price to retest that level and turn bearish again and continue down. So this we are not going to be using an instant execution or a pending order. We are going to be using a limit order, because we anticipate price to pull back for the retest before we get the overall continuation down. So this is how we set our trade. We set our limit order and wait for price to pull back to that level and trigger us in before finally going down in our direction. So this is how you use the limit order. This is a level you anticipate price to get back to and trigger you in. Then safely place your stop loss above the key level for a continuation down, because the trend is now down. Once price has violated this level, the trend is down. So we're only looking for sales. So this is how you use the limit order. So the first one we said was the instant execution or market order. The second one was the pending orders, which are the buy stop or the sell stop order. And the third one and the last is the limit orders. So I'm not saying you have to use all of this. So once you master one of these entry strategy, you start seeing consistent and amazing results in the market. So that's it. If you have any question, as I always say, drop it down in the comment section, and see you guys next time.